The Federal Reserve just delayed cutting interest rates until late 2026. If you've been waiting for relief on loans or mortgages, this news could hit your wallet hard here. That's why it happened now. The Federal Reserve's decision to push back rate cuts stems largely from war-related inflation pressures. Conflict in key global regions has disrupted supply chains and increased energy and commodity prices. This inflation risk means the Fed cannot safely ease monetary policy without risking higher prices. Reuters reports the Fed's cautious stance emphasizes that inflation remains a threat, forcing a delay in rate cuts originally expected earlier. With rate cuts postponed until late 2026, borrowing costs remain elevated. This means higher mortgage rates and more expensive loans for consumers and businesses. Investors also face more uncertainty as markets adjust to a prolonged period of tighter monetary policy. The delay signals the Fed's priority is controlling inflation over stimulating growth, which could slow economic recovery for many Americans. The Fed's rate cut delay reflects concerns that war-related supply disruptions will prolong inflation. Energy prices and commodity shortages continue to drive up costs across the economy. By holding rates higher, the Fed aims to temper demand and prevent runaway inflation. This approach suggests inflation relief may be slower, impacting everyday expenses like gas, groceries, and utilities. Looking ahead, the Fed's message is clear. Controlling inflation is the priority, even if it means slower economic growth. Rate cuts have been delayed to late 2026, signaling a more cautious, data-dependent approach. The central bank will monitor war developments closely. Any escalation could further impact inflation and delay easing. This uncertainty keeps markets and consumers on edge. For you, this means higher loan and mortgage payments may last longer than hoped. Budgeting for ongoing inflation in essentials like food and energy is wise. If you're considering borrowing or investing, factor in higher costs and uncertainty. Staying informed on Fed updates and geopolitical developments will help you plan effectively in this volatile economic environment. The Fed delaying rate cuts until late 2026 shows just how serious inflation risks linked to global conflicts remain. That means higher borrowing costs and prices may stick around longer than you expect. Stay alert and plan your finances carefully. For more crucial updates on how these changes affect you, hit subscribe and stay tuned.